investors, and welcome to Trade with Raymond. I've been away for a while and today I'm back with an informative video. As you know, my videos are strictly for education. However, if you're looking for something that could help you to laugh, I'm sure the title can even do that. And it's about keep your cocoa and slaughter the cows. Now, I'm going to talk about the agric market and some important elements there. I'm starting with the cocoa market. Well, most African countries have depended on gold and crude oil and cocoa for a long time. I've been talking about crude oil, I've been talking about cocoa, gold, and today I'm talking cocoa and some other agricultural products. So, from 1994, we have seen cocoa prices being that low, and these low prices really have not been the best for most farmers. And we have a large majority of Ghanaians or African people involved in cocoa trade. Ghana is known for cocoa trade for many years. In fact, it's the next trade after gold. And we see the behavior of the market from 1998 all the way to 2002, where we saw an increase in price, which was exciting. I remember those years, which was announced everywhere. And since then, we saw the market fall a bit and some recovery. However, prices have not been encouraging for many years. And for me, I would say that anybody involved in the trade up to the period of 2010 suffered a bit. However, as we have now, we have prices after 2010 also falling. So the market created a high in 2010. Between this period and this 1994, for me, the cocoa trade experienced a slow growth, even though this pop here was exciting for some farmers or most farmers and even countries that depended on cocoa for foreign exchange, but that did not hold for a while. That was in 2010, and then just about the start of 2011, prices fall. So prices were around $3,775 per metric ton, and then currently we had the price falling and then recovering a bit. So this price point became what we call in technical analysis resistance. At this point, prices would need to break this point for us to go to a new price point. What happened is that between that period, we saw prices falling, struggling to rise. However, this price period had been broken, and this was broken in February 2024. This is indeed an exciting time for farmers where prices rushed up. Between this period, we have some cocoa farmers converting their farms to do some other things, some other developments, and therefore some farmers missed out of this parabolic move. The thing about parabolic move is that price may not be sustained for a long time, and therefore I saw some central banks talking about prices falling to a certain price point. However, if you use Fibonacci, you should expect prices to fall 33%. And then if you understand support and resistance, prices are expected to fall to the previous high, which is what we saw in the start of 2011. Yes, 2011 March. Should prices fall, we should expect prices to fall to this area. The beauty here is that anybody now coming into the farming business is coming at a good time, because this is a major price point that has been achieved. Prices will only fall to this point technically. All right. So if you come into the business and prices fall this price point, it's still good, because then you are you're looking at selling at a good price and expecting prices to recover. This is a very strong point that is going to be maintained for a long time. I don't expect cocoa prices going below this. So Ghanaians or anybody interested in cocoa, this is really a good time, because this price point will hold Should prices fall from this high? Should there be suppression of cocoa prices? You shouldn't be that worried, because this price point is a good price point and it's going to hold for you, and expect prices to rise. Now, the deal here is that those who enjoy chocolate, you have to buy it through your noses, because chocolate prices have started changing. I remember I buy the big bar for 15 CDs. It's gone to 18 CDs, some places 19, 20. It is changing because the prices are going up in the international market. So cocoa is awesome, and I believe that most people who are farming should focus and get acquire more land for cocoa. Then you have this other commodity. Is my screen frozen? Okay, so you have coffee. For me, I don't think anybody should be interested in the coffee market, because the coffee market, well, I love coffee. I drink coffee. It's exciting to drink coffee. It's tastes good, smells good. But this is the issue. You have a situation here where prices were once up, and then currently prices are no more up. Yes, those prices were here in 2007, 1997. They are about, there's so much volatility. You see prices going to a very high, they drop aggressively, they try to test the previous high over here, they didn't succeed, they fall again. There was a higher low here, and this is, I mean, this is a market I don't want to trade, and I will not encourage anybody to trade or get into it, because this is a very volatile agricultural product that can result in major losses for any farmer or any investor. So for me, I'm going to keep my cocoa and ignore coffee. Then orange juice. Well, we see a lot of oranges being harvested and going bad, but this is a wonderful market. Orange juice is used in many areas, in beverages, in pharmaceuticals, in a lot of other places. We industries we use orange juice, and you see prices coming. I mean, from 2005 all the way to 2007, you saw prices going up here, and then over here they were up here. It's repeated itself. Another section here, another high here. So triple top, and usually when you have a triple top, there's a likelihood of a failure or a breakout. But this strong candle broke out, meaning that this triple top has been violated, and therefore should prices drop, they may end at this triple top area that has become former resistance, has become support, where prices are going to rest on it and push back up. So orange juice market is an awesome market to invest in. It's an awesome market to explore for many countries and farmers, and I like it, even though I like cocoa better. Then you have cattle. I don't like this market because, I mean, they give birth to just one, and if it's two, one may be invalid, or one may have some challenges, reproductive challenges. It's usually one. It takes a long time. It's very expensive to manage, and I don't like the fact that you have prices moving smoothly up and it falls heavily and it capitulates and tries to go up again. This is not a market I will invest in. It's too expensive to manage. They're too big, and even though you may like the meat, but this is not a market for me, and it's not a market. So obviously I'll keep my cocoa and slaughter my cow. And I mean, I'm slaughtering all the cows. I don't need them, and it's not a market I will invest in seriously. And because there are some other smaller animals that have a better market potential. For example, let me look at this area. If you could look at the goat milk market, there's a cow milk market. I mean, look at the calories. They're better here. They're better in protein. They're better in fat. They have reduced carbohydrates. They are lesser sugar. Sodium is good here. Calcium. And for me, it's a huge market. I mean, price per liter of goat milk is almost twice that of cow milk. It's used in the pharmaceutical industry. Children with lactose problem drink this. Companies that are making some pharmaceutical product and cosmetic product and lip gloss are using this goat milk. So for me, and it's faster, it's easier to manage. They're smaller in size. They're very easy to manage. You don't need a lot of medication and it's easy. So for me, I'm going to slaughter my cows and then focus on my cocoa. And if by adventure I want anything, I'll be looking at orange juice market and the goat market. So thanks for listening. Share. Let's learn more, and then let's get prepared. for the future. Thank you, and like the video and share again. Bye bye.